Stop me if this sounds familiar. You've been watching a stock or a crypto pair consolidate for days. There is a clear resistance line. Suddenly, a massive green candle breaks through. You think, this is it. The breakout. You buy? And then, within an hour, or even minutes, the market completely reverses. It crashes back through the level, hits your stop loss, and leaves you wondering if the market is rigged. The truth is, it's not rigged. You just fell for a scouting party. You were caught in an upthrust. Today, we are going deep into the masterwork of Steve Nison and Richard Wyckoff. We are going to learn how to identify the spring and the upthrust. These aren't just patterns. They are the footprints of institutional, smart money trapping retail traders. By the end of this video, you won't just avoid these traps. You'll learn how to trade with the trap for some of the highest risk-to-reward setups in technical analysis. To understand these concepts, you have to stop looking at charts as lines and start looking at them as a battlefield. Imagine a horizontal trading range. The top line, the resistance, is the bear's territory. They are dug in. They are defending that price. The bottom line, the support, is the bull's domain. When the market stays in a range, it's a stalemate. But eventually, one side sends out a scouting party. This is my term for it, but it perfectly describes the price action. A scouting party is a move by the bulls to try and propel prices over a resistance area. They are testing the resolve of the opposing troops. If that scouting party can set up camp, meaning the market closes above resistance and maintains the new highs, a beachhead is made. Fresh bullish troops join in, and the market trends up. But if the bears counterattack and push that scouting party back into the range, the bulls have lost control. The beachhead has failed. That, my friends, is an upthrust. Let's look at the mechanics of the upthrust. This is a bearish signal that occurs at the top of a range. An upthrust is a penetration of a horizontal resistance area where the bulls fail to sustain those new highs. In Western trading, we call this a false breakout. In Japanese candlestick terms, it's often marked by a shooting star or a bearish engulfing pattern. There is a brilliant Japanese saying, "Let him climb the roof and then take away the ladder." Think about that. The market makers allow the price to climb. They let the retail traders get excited and climb onto the roof by buying the breakout. Once everyone is positioned long, the ladder, the support, is pulled away. The result is a steep, descending price action as everyone who bought the breakout is forced to sell at once. How to trade it? Wait for the market to get back under its former resistance area. This is your signal that the bears have won the battle. If the market is truly weak, it should not return to the most recent highs of that upthrust. Your stop loss goes right above that peak. Here is where subjectivity comes in. Steve Nison suggests two targets: a conservative target at the initial area where the rally began, and a liberal target at the very bottom of the trading range. I always suggest taking 50% of your position at the conservative target and moving your stop to break even. This protects your capital while letting the rest of the trade run. Now, let's flip the script and look at the spring. This is arguably one of the most profitable bullish setups in a trader's arsenal. A spring develops when the market breaks under a horizontal support area, but then, like a compressed coil, it springs back above that broken support. It proves that new lows could not hold. When support breaks, the masses start shorting. They think the downtrend is resuming. At the same time, the smart money is sitting there with massive buy orders, waiting to soak up that liquidity. Once the selling pressure is exhausted, the price snaps back. Sometimes a spring happens over several sessions. Steve Nison describes a scenario where the bears break support and look like they are winning. But then, the bulls come back in what the Japanese call a kamikaze attack, a sudden, violent surge of demand that propels the price back over the broken support. How to trade it? By once the price closes back above the support level, place it just below the recent low made by the spring. If the price returns to that low, the spring has failed and the beachhead is lost. Your primary objective is the high reached immediately before the spring was made. Your secondary objective is the top end of the entire trading range. Now, Steve Nison mentions that we won't focus exclusively on volume. But if you want to be a professional, you must look at it. Volume is the confirmation of the battle. For a spring, if the break below support happens on light volume, it means there isn't real conviction behind the sellers. If the subsequent rebound back into the range happens on heavier volume, that is a massive bullish signal. It shows the smart money has entered the building. For an upthrust, if the break above resistance is on low volume, but the return move back under resistance is on high volume, the likelihood of a successful trade increases significantly. High volume on the return move means the latter has been pulled away with force. Let's look at a real-world example from Nison's work. In one chart of the British pound, resistance was clear at points A, B, and C. A doji at point C showed us hesitation. Then, a surge of demand pushed the price over resistance. The bulls thought they had won, but their victory was short-lived. The market pulled back under the levels of A, B, and C. That was the upthrust. Notice how the price didn't just drift down, it collapsed. This is because all the traders who bought at the high were trapped. Their stop losses were hit, which added more selling pressure to the market. Another example, we had a resistance zone. A tall green candle pushed over it. The bulls had a foothold, but by the very next day, a red candle closed back inside the zone. The texture of the market changed instantly. The bulls didn't have the metal to hold the highs. That upthrust led to a total market collapse after a bearish engulfing pattern appeared. One thing I love about Nison's teaching is his honesty about subjectivity. Many gurus tell you there is one perfect way to draw a line. Nison admits that some may see the start of a rally at point 1, while others see it at point 2. This is why I use a zone of support rather than a single line. If the price breaks the zone and springs back, the signal is valid. Don't get hung up on a single penny or tick. Technical analysis is about the spirit of the move, not just the math. The most powerful aspect of the spring and upthrust strategy isn't the profit, it's the risk management. Technical analysis is designed to foster a disciplined approach. There should always be a price that tells you your forecast is wrong. If you buy a spring and the market pulls back under the spring's low, you are wrong. If you short an upthrust and the market closes back above the upthrust high, you are wrong. By having these clear invalidation points, you can trade with confidence. You aren't guessing, you are reacting to the victor of the battle. Let's wrap this up into an actionable plan you can use tomorrow. Identify a lateral trading range. Find clear horizontal support and resistance that has been tested at least twice. Wait for this scouting party. Don't trade the initial break. Let the market move outside the range. Watch the close. If the market closes back inside the range, look for your candle confirmation, hammer for spring, shooting star for upthrust. Look for that high volume return move. Set 2 targets. Be conservative with the first and trail your stop for the second. Trading is about patience. It's about waiting for the bulls or bears to prove they aren't victorious. If you made it this far, you are clearly serious about mastering Japanese candlesticks. This strategy is a game changer when you stop chasing breakouts and start trading the traps. If this video helped you understand the market a little better, please hit that subscribe button and turn on notifications. Question of the day: do you prefer trading springs at the bottom or upthrusts at the top? Let me know in the comments below. I read every single one. Until next time, trade safe and remember, watch the battlefield and wait for the victor. See you in the next video.